I'm very pleased to be able to speak to Lawrence Wintermeyer, the Chief Executive of Innovate Finance, an independent, not-for-profit, membership-based organization that brings together the FinTech companies in the UK. Maybe we could start with just getting a sense of your organization, Innovate Finance. What is it? Is it an association of FinTech companies in the UK?
It is. It's an independent, non-for-profit association, and it was the idea of the number 10 policy unit in the UK really to create an organization that represents FinTech. So we're a little over a year old, and I think that idea or decision looks very prescient given history, and that FinTech is, it's a bull market in FinTech right now. But in essence, we represent everyone from seed startups and hipsters or innovators to a lot of the large financial institutions. And our primary role is not just to build an ecosystem, but to build a collaborative and inclusive environment where we can put together disruptors with institutional executives, the regulator, venture capitalists, and other professional service providers in the ecosystem to work together and collaborate and move FinTech forward.
Okay, that's very good. I mean, that's basically the ecosystem of all of the different players in FinTech. I want to ask you 3 questions, but before I do that, the one question that I'd like you to answer to give us a sense of your membership, is the membership tiered in that if you're a seed, you pay a certain amount, and if you are pre-IPO, you pay a certain amount?
Yes, it is. And so as a non-for-profit, we're funded partially by the City of London, Canary Wharf Group, and the British Business Bank. And in order to help us make ends meet, I actually have a fairly small team of 14 people. And so we do a lot of policy shaping and directing, but the heavy lifting is done in essence by our members. And so the institutional members, or the big banks or insurance companies, are very important to the membership in that they pay an annual subscription that helps us subsidize and do things for the startup or the seed community. And generally the seed or startup players come in at a very low fee rate in order to connect to the community and to connect to the activities that we have to offer them, because ultimately we're trying to support and build a healthy FinTech ecosystem, and that starts at right at the seed level.
I'm very interested in your organization in the way it came about, because it gives us a sense of how the dynamics between the supply side and the demand side of FinTech is evolving. You say that the banks support the association substantially. How did you get them to do that? Because I'm sure there's a hurdle that you needed to get over where all of the different banks think that they can corner a little bit of the FinTech market and take a proprietary view of how they're going to succeed in FinTech. What do they get out of being a member of an association like this?
Well, that's a really good question. From where we sit, I think that most large institutions are actually, quite cooperative and are really focused on the benefits of what FinTech might have to offer. But because it's so early in the stage of FinTech development, many of them aren't sure. I think it's fair to say none of us are really sure what the answer is, or the right set of answers. So they're all collaborating or participating in an open way to help understand really how FinTech may be able to ultimately transform their own propositions to customers or partners. So, there isn't as much tension in the disruptor institutional environment as people think. Innovators generally are outside of the regulatory environment. Generally in the payment space, peer-to-peer space, they're developing solutions without a lot of regulatory friction, and that's broadly where the institutional venture capital has gone. Institutions are generally focused on a balance sheet, risk measures, and a P&L, and even with their own compliance obligations, they aren't really motivated or measured to be disruptive in an innovative way. So they need the innovators that are sitting outside of the ecosystem to really help them think about how they're going to change. It's the first time in 25 years, not just in London but globally, I've seen bankers or insurance executives behave a bit more like Californians, in that most people really have a fairly open and collaborative approach to this. And in London and the UK, we've got a fairly healthy ecosystem. People are really all participating because we're all really learning how to build successful FinTech organizations.
If you were an investor or a private equity player, the way in which you look at your portfolio, you take a view, that you wouldn't invest in, ideas unless they were going to be transformational, and some investors take an incremental view and stuff like that. In the ecosystem that you've created within the association, how would you classify the different players as they exist, and how do you deal with them differently? Being an association rather than an investor?
Well, if we just focus on the capital side of things, there are broadly two pieces to the capital picture. One is venture capital and the other is corporate venture. And in the venture capital space, the volume of venture capital is coming from institutional venture capital, which is quite often US West Coast based. So that's the capital that backs a lot of the momentum in the community in the UK. At the seed level, the seed investor, at the entrepreneur level, the UK has a number of tax incentives for both seed and tech investment that really encourage entrepreneurs or de-risk some of the capital outlay for entrepreneurs. So that's very helpful, I think, to get local innovation and the local innovation hubs fostered. On the corporate venture side, that's all of the big banks that we see here at Sibos. Most of them have a significant investment going on in disruptive innovation. And that can be in one or a number of things, ranging from a corporate venture fund. And Barclays and Techstars are a great example of an accelerated collaboration in a corporate venture fund. Innovation labs, where institutions have labs in the US or in Europe that are outside of the main institution, who are motivated and focused on disruptive innovation outside of the organization. Digital M&A, talent scouts, and quite often internal innovation labs where disruptive innovation is going on inside of the organization, but in a controlled lab fashion that's involving staff. So Lloyd's Banking Group is an excellent example of an organization that's doing internal innovation or disruptive innovation using their own staff, but with a collection of designers, technology specialists, and staff coming together to create incremental disruption.
And the players themselves, the startups themselves that come on board, how do you guide them through the process, or it's just that you provide the ecosystem and they fall or fail or succeed on their own?
We provide a number of things. First and foremost, we've got a connected community, so it's a place for them to come to get answers to questions around anything from how do I raise capital, focus on exits, how do I deal with some of the regulatory friction that's in the environment, how do I communicate to the public if I've got a direct-to-consumer place. We do a lot of work just helping them understand how to communicate. So there's a practical working ecosystem of practitioners around to help them with those things. On the more material side of things, particularly in the UK, we actively lobby on behalf of the community. So the Open API is a big move in the government to really set up an open payments infrastructure for all FinTech players, whether they're institutions or startups, to participate in. So on areas of regulation or legislation in particular, startups don't have the compliance or risk teams or knowledge of that space. So they're heavily reliant on us for things like that.
A little bit more about this open API for payments. What did it require you to do? Do you work with the regulators, with the banking regulators? Who drives it, and where is it today?
Well, it's a classic example of a government announcement or policy that goes through a legislative, pre-legislative consultation process that's out in the community. It was initiated by the government as a means of making sure that we're promoting inclusiveness in the number of new entrants into the financial services space. Our particular role is to help members not just through the consultation process post-legislation, but right now there is an API working group that's in play with the Treasury. We're one of the secretariats on that, and the working group really has a mandate to put together the initial blueprint or the initial design of how that's going to work. And that first phase will be done by the end of this year.
And how do you measure its performance, the number of applications developed within that ecosystem? Or?
Well, it's not there yet, so we'll have to wait to see what the working group delivers by the end of the year in terms of its overall view of how the API should work. But ultimately, the principle of it is to put an open API structure in place with an interoperable protocol so that anybody that's registered to participate in the community can ultimately have a frictionless payment transfer system.
Did this come after the UK put in place faster pay and what they have right now, or is this an afterthought in a way?
Well, I don't think it's an afterthought, but it's part of the government's proactive agenda of really opening up financial services. In the European Union, the CMU, or the Capital Markets Union, is coming, and there's a broader legislative framework that is really focused on making sure that we've got an open, or a more open and even more competitive financial service system.
So in payments, peer-to-peer?
Well, peer-to-peer currently is an area that in many places of the world isn't regulated. In the UK, the peer-to-peer community is starting to focus on areas where some aspect of legislation or regulation might be helpful for consumer protection. So, it's emerging. And again, if you look at the capital inflows from, institutional venture into FinTech, the two biggest areas globally are payments, and quite often that's the remittance space, which is more of a global money transfer play, and peer-to-peer. And so those are both areas that I think elegantly start to fit into either new legislation or new infrastructure in the case of the UK and the open API, or areas where with P2P we may find that certain legislative protections on behalf of consumers are good. It's an emerging story.
Yeah, but what other areas would that be?
Well, the big area in the UK, or the next big area, which is a trending topic to look at, is what we call the future of advice. And, simply put, with a previous retail distribution review, the conclusion was more or less the cost of advice is generally expensive or prohibitive as a mass market proposition. So either the institutions that offer advice propositions are in a position where if they're going to do that competitively, they need to almost downwardly scale that to a cost that's acceptable to consumers. So I think the community is really focused on the benefits that technology have to play in the advice space for savings, for investment, for helping people with simple outcomes and saving for things and buying things, or putting the children through university or getting them married, those sort of things. And the US call it the robo-advice space, but quite often even in the robo-advice space, which covers a pretty broad range of execution only to discretionary, quite often that's still focused in the US on the high net worth or the ultra high net worth market.
Since you do have a lobby function, tell me a little bit about what you see or how you see regulation evolving. I think the temptation initially with the disruption that FinTech was bringing into the banking industry, there was this temptation to regulate it the same way that you regulate banks. Do you see a parallel regulation regime evolving? And if you do, what are the elements of regulating the future of finance? How's that different from the way banks are being regulated today?
Well, in the UK, and I think in many territories, there's a singular focus on FinTech, or FinTech isn't being treated any differently than is the other institutions, either in banking or insurance, are being regulated. And certainly in the UK, that's not the case. So the Financial Conduct Authority in the UK is the primary regulator that we work with for FinTech. There's a unified and cohesive view on what that needs to be. But one of the things that makes the London and UK FinTech ecosystem, I think, quite different to the US or certainly other parts of the world that we see is that the government is very digitally astute, whether that's through digital culture and the digital identification scheme that they're focused on, whether it's through FinTech.
They're working on things themselves.
Yes, indeed. So the government has.
Sorry, can you start that sentence again?
Yeah.
The place where the UK is different from other regimes.
Yeah. Well, the UK is very different to most other territories in that in the FinTech ecosystem, we have a progressive government and regulator. So that the government has its own digital transformation program in play, which includes digital identification. At the highest levels of government are, fairly knowledgeable about FinTech, the distributed ledger, a lot of these big technical trends, coming through, and the main regulators, the FCA, the Financial Conduct Authority, who we work a lot with, the new payments regulator, the payment systems regulator, all really have, more than I think we've ever seen in any historic precedent, an open and collaborative view of how to work with FinTech, within the context of banking regulation. So I think that's something we do differently. As a members organization, our role is to bring together members and regulators as part of the lobby work that we do to try to progress that along. My personal view is that right touch regulation will be emerging in financial services, and it's an interesting space to watch in that as regulators start to innovate themselves and take advantage of the digital tools that are available, particularly around data or correlation, there are greater opportunities for regulators to plug into banks or insurance companies, understand the data that's actually online and working right now, and be able to proactively regulate rather than the traditional model of reactive regulation where legislation is put in place post an event to stop something that behavior that's happened a number of years ago.
What have you seen so far that shows that proactive thinking in regulation?
Well, in all of the consultations that we do as part of the legislative assembly or process in the UK, we're involved with active consultation with the FCA, either in roundtables or through members who actively seek the guidance of the community. 2, Project Innovate is, in essence, an innovation hub within the FCA that has its own sandbox and regulatory environment that consults to fintechs, and really it doesn't give advice, but in the context of guidance helps steer startups on the different approaches to regulation depending on the particular product or service that fintechs are offering. I think that's pretty extraordinary. I've been very impressed with that myself. In the context of the distributed ledger and the promise the promise of the applications that could offer to banking infrastructure, whether it's payments, settlement, KYC, AML, we've got the regulator integrated with our own lab, which is all about promoting use cases for interoperability and allowing members to demonstrate that they have use cases or applications for the distributed ledger that are of value to the community. The governor of the Bank of England is focused on digital currencies. Digital currencies are treated as currencies, and that's quite unique in the world. So there are a whole range of measures. I mean, the City of London, which is one of our funders, is proactively focused on making sure that we get the FinTech agenda, right through the city. So, in all levels of government, I think you see, quite a bit of cooperation.
Is the asset under management, is that a zero-sum game in that, the idea is to have more investments generated out of London rather than, New York or Silicon Valley or Singapore?
Well, no. I mean, in terms of global fintech investment or the pie, I don't even know how it breaks out globally. But broadly, Silicon Valley invented venture capital and tech. Don Valentine and Arthur Rock, coming out of Intel, single-handedly invented the modern venture capital industry. So they understand speculative risk. They understand venture capital. In 50 or 60 years, they've done a great job of building world-class technology, companies and accumulating a lot of wealth for investors or for entrepreneurs. So the U.S. angle of it, from our perspective in FinTech, is definitely the tech, and there's a bit of fin. And in New York, you see a lot of fin. The relationship between London and New York, I think, is historic in a banking, context. We have a lot in common, but Tel Aviv right now has the Cypher hub. So Singapore, I think, really has got a unique opportunity to set itself out as a FinTech hub, but also as a solution hub, because the regulator here has looked at what's going on in the UK. So each hub actually brings, I think, a different ingredient to things and has either a different competency or capital quality about it. So it's more collaborative globally than, I think, competitive.
Lawrence Wintermeyer, thank you very much for talking to us today.
My pleasure.